In today's video, I've got a 3-cent penny stock that's completely flying under the radar despite positioning itself at the forefront of one of the biggest energy transitions of our generation. This stock traded as high as 4.5 cents earlier this year, but after pulling back, it's now sitting at just 3 cents, while some analysts are projecting price targets that could represent over 2,000% gains from these levels. In today's video, I'll be breaking down SunHydrogen, ticker symbol HYSR on the OTC markets. But before we dive in, if you're finding value in these under-the-radar penny stock breakdowns, do me a massive favor and smash that like button right now. It literally takes 1 second, but it helps the algorithm push this content to more people who need to see it. And if you're new here, make sure to hit that subscribe button and turn on notifications so you never miss when I uncover these hidden opportunities. Trading for pennies on the dollar. Quick legal disclaimer, as always, I'm not a financial advisor and nothing in this video constitutes financial advice. You absolutely need to do your own research and make your own investment decisions based on your personal situation and risk tolerance. Alright, let's get straight into it. SunHydrogen is a development stage company that is working on breakthrough technology to produce renewable hydrogen using nothing but sunlight and water. The company's flagship product is called the SunHydrogen panel, which is a solar-powered nanoparticle system that actually mimics photosynthesis to separate hydrogen from water molecules. If you think about it, this is essentially trying to replicate what plants do naturally, but for industrial-scale hydrogen production. The technology is designed to produce what they call green hydrogen, which is hydrogen produced without any carbon emissions. The company was originally founded back in 2009 under the name HYSR Solar and rebranded to SunHydrogen in June 2020. They re-headquartered in Coralville, Iowa, and the stock trades on the OTC markets under ticker symbol HYSR. Now, because this is an OTC stock trading at 3 cents, you probably haven't heard much about it, and that's exactly why we're covering it today. Here's why the timing on this could be absolutely critical. SunHydrogen is positioning itself in what could be one of the most explosive growth sectors of the next decade. We're talking about the green hydrogen market. Traditional hydrogen production is extremely carbon-intensive because it typically involves burning natural gas or coal. But green hydrogen, the kind that SunHydrogen is developing technology to produce, is created using renewable energy sources with zero carbon emissions. The applications for this are massive. We're talking about hydrogen fuel cells for electric vehicles, hydrogen as a clean fuel for heavy industry like steel and cement production, hydrogen for fertilizer manufacturing, hydrogen for long-term energy storage to support solar and wind power grids, and even hydrogen as jet fuel for aviation. The market opportunity here is genuinely staggering. According to various market research reports, the global hydrogen market is expected to explode over the next decade. Some projections suggest the market could grow from around $150 billion today to over $200 billion by 2030, and potentially reach $600 to $700 billion by the mid-2030s. That's a compound annual growth rate in the double digits. But here's what makes it even more interesting. Governments around the world are pouring billions of dollars into hydrogen infrastructure and development. The European Union has committed over 400 billion euros to their hydrogen strategy as part of their Green Deal. The United States has allocated billions through the Infrastructure, Investment and Jobs Act and the Inflation Reduction Act specifically for clean hydrogen projects. Countries like Japan, South Korea, and China are all racing to become hydrogen superpowers. This isn't just speculation, this is policy-driven demand that's creating a multi-decade tailwind for companies in this space. The International Energy Agency has stated that achieving global net zero emissions by 2050 will require hydrogen demand to increase more than 6-fold from current levels. So we're not talking about a niche market. We're talking about a fundamental transformation of the global energy system. And SunHydrogen is developing technology that could play a role in that transformation. In terms of recent developments, SunHydrogen has been making some interesting progress on the technology front. Back in November 2025, the company announced advancements in their nanoparticle hydrogen production technology through their partnership with a German engineering firm called CTF Solar. They've been working on scaling up their prototype panels and moving toward commercial viability. In October 2025, they showcased their renewable hydrogen technology at the World Hydrogen Technology Expo in Hamburg, Germany, which is one of the premier global events for the hydrogen industry. This kind of exposure at major industry conferences suggests they being taken seriously by potential partners and customers. The company has also been filing patents to protect their intellectual property around their photocatalytic hydrogen generation process. Now, it's important to be crystal clear here. SunHydrogen is still in the development and pre-commercialization phase. They're not generating meaningful revenue yet. This is very much an early-stage technology play, which means it comes with significant risk, but also potentially significant upside if they can successfully commercialize their technology. Now let's talk about what analysts and forecasters are saying, because this is where things get really interesting. Obviously, with a 3-cent OTC stock, you're not going to find coverage from major Wall Street firms like Goldman Sachs or JP Morgan. But there are independent research platforms and algorithmic forecasting models that have put out some pretty eye-popping projections. According to StockScan, one forecasting platform that uses AI and machine learning models, the average price target for SunHydrogen over the next 12 months is around 6.3 cents, which would represent roughly a 100% gain from current levels. But their longer-term forecasts get even more aggressive. They project the stock could potentially reach 8 cents by 2026. Over 10 cents by 2027, and some of their bullish scenarios have the stock trading north of 20 cents by 2030. Now I want to be very clear, these are algorithmic projections and not guaranteed outcomes by any means. Penny stocks are notoriously volatile and unpredictable. But what these forecasts tell us is that if SunHydrogen successfully executes on their technology roadmap, and if the green hydrogen market develops as projected, there could be substantial upside from these levels. Even hitting just 10 cents would represent over a 200% return from today's price of 3 cents. Looking at the company's financial position, this is where you need to understand what you're getting into. SunHydrogen reported minimal revenue, only about $1,300 in trailing 12 months, according to the latest available data. For all practical purposes, they are a pre-revenue company still in the research and development phase. The company is currently unprofitable, with a net loss of approximately $8.2 million over the past year. However, that's actually an improvement from previous years. Their rate of loss reduction has been running at about 31.6% per year over the past 5 years, which suggests they're managing their cash burn and getting more efficient with their R&D spending. On the balance sheet, SunHydrogen has a market capitalization of about $170 million at the current 3-cent stock price. They have total assets of around $34 million based on their most recent filings. The company does not carry significant debt, which is actually a positive. They've been funding operations primarily through equity raises, which is typical for development stage biotech and clean tech companies. One thing to watch closely is their cash runway. Based on their current burn rate of around $8 million per year, and assuming they have cash reserves of approximately $20 to $25 million, they likely have a runway of 2 to 3 years before they need to raise additional capital. This is important because it means they have time to hit key development milestones without immediately diluting shareholders. But it also means that future equity raises are likely at some point. The risk factors here are significant, and I need to make sure you understand them before you even think about putting money into this stock. First, technology risk. SunHydrogen is developing unproven technology that's not yet commercially viable. There is no guarantee they'll successfully scale their panels to industrial production levels or achieve the cost efficiencies needed to compete with other hydrogen production methods. Second, execution risk. Even if the technology works in the lab, going from prototype to commercial scale production is incredibly difficult and capital intensive. Many clean tech companies have failed at this stage. Third, competition risk. SunHydrogen is not the only company working on green hydrogen production. They're competing against both other startups and major energy companies with far deeper pockets. Fourth, market timing risk. Even if they develop working technology, the green hydrogen market might not develop as quickly as projected, or policy support might not materialize as expected. Fifth, dilution risk. As I mentioned, the company will likely need to raise more capital at some point. If they do that by issuing more shares, existing shareholders could see their ownership percentage decrease. Sixth, liquidity risk. This is an OTC stock with relatively low trading volume. Getting in and out of positions can be challenging, and bid-ask spreads can be wide. And finally, regulatory risk. Any changes to clean energy incentives or hydrogen subsidies could significantly impact the company's prospects. With all that said, here's why someone might be interested in SunHydrogen despite the risks. If you believe the green hydrogen market is going to explode over the next decade, and if you believe SunHydrogen's technology has a legitimate shot at commercialization, then getting in at 3 cents when the company has a market cap of only $170 million represents an asymmetric risk-reward opportunity. To put it in perspective, if SunHydrogen captured even a tiny fraction of what could be a multi-hundred billion dollar market, the stock could potentially increase many multiples from current levels. The key catalysts to watch for would be successful pilot projects demonstrating commercial viability, partnerships or licensing deals with major energy companies, securing government grants or contracts for hydrogen production, achieving key cost reduction milestones that make their technology competitive, and ultimately generating meaningful revenue from actual product sales. Any of those catalysts could serve as a major re-rating event for the stock. So guys, what do you think about SunHydrogen? Is this a legitimate ground floor opportunity in the green hydrogen revolution, or are the risks just too high for a development stage OTC stock? Penny stocks, especially pre-revenue development stage companies, are extremely high risk and you should never invest money that you cannot afford to lose entirely. Always do your own due diligence, read the SEC filings, understand the technology, assess the management team, and make informed decisions based on your own research and risk tolerance. If you found this breakdown valuable, smash that like button, subscribe to the channel if you haven't already, and drop a comment letting me know what other under-the-radar penny stocks you want me to analyze next. I'll see you in the next video.